What we are doing today is called the 3-column cash book. Until now, we have studied journals and ledgers, which is generally an understanding of how the accounting process works. What we do from now on is actually understanding practically how these books are maintained. So the 3-column cash book is the way in which receipts and payments, all receipts and all payments are maintained in the accounting world. Normally a ledger has a debit side and a credit side. It has a date column, a particulars column, an amount column, and then a date column, a particulars column, and another amount column. This is for the debit side and this is for the credit side. Here we have 3 ledgers that we have combined into one. All 3 are cash accounts. The first is cash in hand. The second is bank, cash at bank. And the third is a nominal account, discount. Is not a cash account, it is in fact a nominal account. It's either received or paid or allowed. But discount has a close relation with cash because discount that comes in accounts will always be cash discount. Right? So the only time discount is ever given to someone is either when you're paying him or when you're receiving money from him. Therefore, these 3 accounts are always clubbed together when it comes to actually making the entry. Now what we have done here is we have taken all 3 ledgers and put them on one piece of paper. This column, which is the cash column, is as though it was the cash account, the ledger, the cash ledger. This column, the second, the bank column, is as though it was the bank ledger. And this third column is the discount ledger. So discount on the debit side is discount allowed, and discount on the credit side is discount received. So these will be for all receipts and these will be for all payments. Yes? So when we put an entry in the cash account, for example, when cash is received, cash is debited. Say cash is received from Mr. A. We write the date. Say it is 1st April. We write to Mr. A account. And then we write the amount in the amount column. But since this receipt is in cash, this amount will come in the cash column. Rupees 1000. So what we are doing then is that the particulars column and the date column is common for all accounts, and then the amount goes to the respective column. Suppose the same receipt was made in the bank, say from Mr. B. The entry would have been, say, 2nd April to Mr. B account, and the amount would not appear here anymore, it would appear in the bank column. The same goes for payments. Suppose a payment was made to Mr. C on the 3rd of April. Then we come to the credit side, and in the date column we write the date. We write what was common by Mr. C account. And if the payment was in cash, it would appear here. And if it was in bank, it would appear here. So let us assume that 5000 was paid in cash. It appears here. So again, when a receipt is made, it comes on the debit side. You write the date and the particulars just like any other ledger. If it's in cash, you put it in the cash column. If it's in bank, you put it in the bank column. And the same is done on the credit side too. Now, a few more things need to be discussed. What happens when cash is withdrawn from bank? The first thing that we have to know is what is the entry to be passed. Cash and bank are affected. They are both real accounts. Cash comes in, bank being a personal account is the person who gave it to you. Cash is debited, bank is credited. So, on the debit side, we will write to bank account. Cash is debited. Say the amount was 500 rupees. We put it in the cash column. Say on the same date, obviously bank has given you money, so bank has to be credited. So we will write by cash account and write the same amount in the bank column, 500. Right? Now, cash and bank are both separate accounts, but since they are in the same primary book of entry, since they are both cash in essence, we call this a contra entry. So what we do now is we go to the journal folio, we make a little C and we circle it like a copyright sign. This is to say that one column is debited and another column is credited. If cash was deposited at the bank, these items would reverse themselves. Right? Let's say this happened on the 5th of April. This is to be done every time cash is withdrawn or deposited. We have to see whatever is going out or whatever is coming in will come on the debit side as a receipt, and whatever is being paid out will come on the credit side as a payment. And then we have to make a C and circle it as a contra entry. So the contra entry was adjustment number 1, which we have to learn separately when we are making a cash book. The next thing that we have to understand is how to treat discount, either discount received or discount allowed. Now, discount allowed would mean that someone had to pay us a certain sum of money, paid any lesser than that, and we okayed it. Am I right? So suppose there was a Mr. X and he had to pay us rupees 10,000 and he gave us rupees 9,900 in cash and we okayed the amount. So basically we gave him a discount of 100 rupees. How to deal with this? When he gave us money on 6th April, it being a receipt, we write it in the bank, on the receipt side, the debit side, we write to Mr. X account. Since the money came in cash, we have to write the sum in this column. But we can only write the cash actually received, 9,900. Now the problem is that Mr. X has to be credited with the whole 10,000. So the balance rupees 100 needs to be debited to discount account. So we put it here. This is one line, and on that same line with one entry we have simultaneously debited cash and discount. So Mr. X gets credited by 10,000. The same would be true if we were allowed a discount by someone else. Suppose on the 7th of April we paid Mr. Z a certain sum of money. Say we paid him 1,500, but we actually owed him rupees 2,000. So he's allowed us a discount of rupees 500. Suppose this happened by check. By Mr. Z account, this much is common. The amount that actually went out of the bank, 1,500, would appear in the bank column. And the discount that we received would then appear in the discount account. So Mr. Z gets debited by rupees 2,000 simultaneously on one line. Once we have understood all of this, all that remains to be seen is how to open or close these accounts. Suppose at the start of the year, we had an opening balance of rupees 3,000 in cash and rupees 10,000 were lying at bank. The entry for opening a ledger account, especially an asset, which means a debit balance, would have been on 1st April to balance brought down. Right? 3,000 rupees were in cash and 10,000 rupees were in the bank column. Discount, being a nominal account, will never have an opening balance. The same has now to be done when we close these accounts. Now what is to be understood is that although all of them are sharing the date column and the particulars column, each column here is a ledger on its own. the balance in this first column here does not affect the balance in the second column here, and vice versa. So when we are balancing these accounts, we look at them one column at a time. So let's balance the cash column first, right? Looking at these figures, it is quite clear that the balance will be a debit balance, which means that the closing account will appear here. So we come here and we say on 30th April, by balance carried down. Now, the cash column, 3,000, 1,000, that's 4,000, plus 500, that's 4,500, plus 9,900, which is 14,400. That should be my closing balance. If 14,400 is required and I already have 5,000, the balance carried down therefore is 9,400, and I circle it to show that it's the balancing figure. Your homework for the next class is to tally the bank column and the discount column and bring it for us. Thank you.